This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to take a look at the market trade here on this Tuesday, let's say good afternoon to Bill Biedermann of agmarket.net joining us. Bill, great to catch up with you again, sir. How are you?
It's really good to see you, Jesse. I'm doing real well.
Well, let's dive right into the markets and talk about things here today. And Bill, we saw a good rally yesterday to start the week, and here today, initially it looked like we were going to give back quite a bit of yesterday's gains. We've kind of come off the lows here, heading into the close, but corn and beans, it just feels like, I've used this term a couple times today, even a whisper, even a hint of cooler temperatures in the forecast here ahead has given us a reason, given the bears a little momentum to move us a bit lower here in this market today. Do you agree with that? Is this really just a weather-driven move here today?
Oh, absolutely. I mean, we're at the most critical time of the crop, and we're facing one of the largest heat waves that Europe has ever seen and forecasted for parts of the U.S. that would set records throughout the U.S. So definitely a critical time for this crop. I mean, really, if we miss rains, now they changed the forecast today, like you suggested, to a little bit cooler, a little bit wetter parts of next week. But if we come in and that varies again more towards drier, Jesse, I mean, the supply-demand balance sheet is very tight. I just got done writing an article. We've got literally a 4-bushel buffer to work with. So if we go from 177 to 173, 4 bushels isn't a real big swing on a national basis when only 2 really good states are Iowa and Illinois. All the other states have had issues. So to swing that 4 bushels off of 177 down to 173 is not unconceivable at all, especially if we trim some yields back with the heat. Now, if we have miracle genetics and we get the rains next week and it does cool off some, okay, then 176, 177 is possible. Anything over 174, not bullish because we're already at a good price. But if you drop below that, now you would require some rationing. And we have to remember too, Jesse, that the European crops, which, by the way, I just got back from there. They look great. Germany looks phenomenal. Italy is in a really serious drought, but a lot of those crops are irrigated. So I think that the heat that's coming on now could supersede the conditions that we saw. But what we saw was really good crops at this point, mostly because they're irrigated.
Well, and you bring up Europe as well, and that all ties into the balance sheet as you alluded to. And I find it just very interesting how all of that's going to play together here. And we look at corn specifically. I mean, on the board right now, $6 corn pretty much roughly is where we're sitting. But this is that key time, pollination time. I've even seeing some pictures in some of the harder hit states, some popcorn kernels starting to appear. So we see all this. If we remain hot and dry, it feels to me like that's going to open us up to some upside potential here in this corn market, Bill.
For instance, the European Union, they produce about 70 million tons, 68 million tons is the latest estimate. So if you had a 20% yield loss, you'd be looking at somewhere around 500 million bushel, okay? And if we took, let's just say 4 bushels that I alluded to off of our crop, let's just say you got down to a 170 kind of a yield, you would be, down from the 174 number that I think that's your worst case scenario right now. You would have a carryover of under 1 billion bushels. So, now one or the other could happen. Well, if it does happen in Europe, it could shift demand towards us. It's just, you're playing a card game right now. You got X amount of cards and you're shuffling them around. You still only got 52 in a deck, no matter how you got it. So it just depends on how many players are on the board. And if you take a couple of people away, the demand for those 52 cards goes up somewhere else. So, we're just this is the critical time. That's the bottom line. So if from a farmer's perspective, if you come in here and you believe we're going to have better than let's just call it 174, 175 yield, USDA is at 177, then there's really no reason to be bullish. Now, is there a reason to be bearish? Yeah, we can sell off. We've got a deflationary federal policy, right? So speculators who had on an inflation hedge are bailing out. I mean, speculators who held stocks have lost so much money that they're having to sell any other risk asset they have to eliminate risk, number one, and to meet margin calls on what they want to hold. And we've seen that across the board, liquidation in commodities, whether it's cotton or OJ or coffee or sugar or corn or soybeans. It doesn't matter what it is. We've seen that selling. So my point is, if we're selling off, we will sell off to a point where we still have tight enough stocks to where you'll still be supported at a good price, but it may not be here. It might be $5. On the other hand, if we have a little bit of a friendly situation, like a 174 yield, we may have to go up, not to $8 though. $7 might be just enough. So because we've got this other side of the coin of deflationary selling. So I think you're really stuck in a yield right now, in a range between the $5 and $7 area. And it's going to take confirmation of a U.S. crop problem below 174 or a problem in Europe, which would be like maybe a 20% crop loss, to where you could start justifying a higher price than $7.
Bill, on the flip side, soybeans, we're a little lower today, but soybeans on the weather front have a little more time. We know August is more the month for beans, but what are your thoughts there? I mean, tight numbers for soybeans as well. And it's just, if we hold this hot, dry forecast into August, I know we're going to see some of the same worries we're seeing in corn right now in the soybean market.
Absolutely. And, if this hot weather continues, I mean, obviously August, September is when we're really going to be making that bean crop. Worldwide, we've got 99 million metric tons. Now, that's a projection up from the 88 that we had last year. So, we've got a little bit of leeway on the world side. And, of course, you got another production cycle coming up here this winter. So that'll make a big difference. But on the U.S. side, it would take we're projecting a record yield again, or near record yield of 51.5. I don't think it's any better than that now. I mean, most of the producers we work with have short beans. Now, short beans don't mean a lot because they can take off and go crazy in August. But with the weather forecast we have, that doesn't really look all that great. So bottom line is we're just going to have to watch it. We've got, whereas corn is critical right now, beans are going to be critical in the next 3 to 6 weeks, but they're not critical right now.
I think as well, another weight on the soy market today, Malaysian palm oil was down about 3% earlier Tuesday. You watched that bean oil market. We were up sharply yesterday. Now we're down triple digits today. It feels like that product market, especially the oil side, is another kind of headwind for soybeans here on Tuesday, Bill.
You're absolutely right on target. The palm oil market has just been collapsing. They've seen a drop of 20% in price. They've seen total supply increase by 10 million metric tons. Now, this is, a month ago, they halted exports because they didn't have it to deliver, or they were afraid to oversell. And today they've got, a large supply, and they're talking about maybe having a shortage of storage for everything. So, a little increase in production, a decrease or holdback of shipping, never a real good idea, causing that reversal in prices. That'll continue to put pressure on us. There's also talk about maybe some biodiesel cutbacks over in Europe. We'll have to see. But another thing I want to bring up is this Ukrainian situation that, the whole world is on fire to get the Ukrainian exports going again. We don't know if you'd be paying Russia for Ukrainian grain or if you'd be paying Ukraine for Ukrainian grain. We don't know anything about that yet. But the significant political change that we saw overnight was that the European Union said that they would lift sanctions on Russian state-owned companies who were involved in the food processing or food-related, agriculturally related companies. That means fertilizer, chemicals, food, canned foods, processed foods. It opens up a door for a lot of lifting of sanctions, which I'm just in awe and shock that the world would do that in the midst of Russia bombing more people. But that's what they said this morning. That really weighed on the wheat market, as well as the cancellation of Egypt to buy to go through with a tender on wheat. I was really encouraged to see the wheat market come back because the U.S. wheat price is already the lowest wheat price today in the world, which hardly ever happens. I mean, we're usually the country that stores the world's excess. So seeing that happen has brought demand to our shores. We saw that 1.5 million metric ton weekly sale. I think the market's telling us that we found value.
Well, and you mentioned the wheat market as well, and you mentioned Egypt's tender. I know the dollar, looking at that today, pulling back a little bit here, down around 106, and we see the VIX trading lower, the stock market, et cetera. You mentioned some of the outside markets earlier. Do you feel like the inflation trade is completely over? Are we possibly entering a recession here with the U.S. economy, Bill?
Well, the housing market is pending home sales were down 13.5%. Existing home sales were down 3.4%. The lumber market's gone from $1,500 down to like $600 or $700. I'd say that when you look at history and look at when do we overstay our welcome of inflation and not control it better with federal policy and get to the party late. There's no history that would tell you we will successfully create a soft landing. So yeah, I believe that we probably will have a recession. I don't think it'll be like a 2008 or anything like that, but I think we will have a recession. And I think that means that prices will deflate. And right now the equity money is leaving the commodity world, which is a good thing in my mind, because get them out of here. And then all of a sudden, if we do have one of these problems with weather over the next 3 to 6 weeks, that money might want to come back in. So it would give us a real boost from wherever we bottom at. We don't know how that'll all work out, right? Because we don't know what the weather's going to do.
Tying that back into the ag commodities a little bit, Bill, I've heard from some producers they're a little worried just with the weather and everything else. They've done some forward contracting of some of their crop already, and now they're worried that they might not grow enough to fill some of those orders. And we watch, some of this inflationary trade come out and prices come back a little bit. If I'm a grower and I feel like I've marketed too much, I mean, is there a way out of this? Is there a way to protect myself, Bill?
Well, you could exit those contracts to alleviate the possibility of having to deliver on something that you don't have, and then replace that with a put and a call kind of a situation that you could put on for basically a zero cost thing that would put a floor in and establish a ceiling price. We've even done that all the way out for our 23 crop, just to lock in our insurance. We bought like a $6 floor and sold a $7.50 ceiling price. And it didn't cost really anything to put on. And it's just been it's just pretty low stress situation to know you got $6 for your insurance at a minimum for next year. You could do the same thing for this oak crop if you're worried about those contracts. Some people might say, well, I'll just buy a call or do something like that to cover that liability of the contracts I have put on. I wouldn't advise that because you still have that delivery obligation. So if you're really worried about not having enough crop, I would get out of those cash contracts and I would turn around and I would figure out a way to protect the downside so that you're not buying the market maybe at a higher price than where you sold, I don't know, and then have the market go down to $5, which it could do, and you'd be not protected as it goes down. So always replace a contract with a put or some kind of thing that will protect you.
Fantastic advice. Protein sector here today, real quick. Cattle, feeder cattle, of course, moving higher with corn going cheaper today. And even the hog market coming back a little bit. Live cattle trading fairly firm here today. As we look at the protein sector as a whole, Bill, look at demand, et cetera, what are your thoughts over there in cattle and hogs?
We're pretty friendly all the way into the first quarter of next year. We just think that a lot of these cattle, when we had the big drought in Kansas and Oklahoma and Texas, we saw a lot of herds get liquidated, a lot of cow-calf pairs and things like that. Those animals have been snatched up. Those calves have been put on feed early. There's not a lot of availability, and the supply numbers are going to remain tight. Demand, we think, is going to be relatively good, and here's why. I talked about a potential recession, less consumer spending. That's disposable income. They planned their vacations. They went on them. They spent that money. They're going to come home from school's going to start, and they're going to quit going out to eat. They're going to quit buying TVs. They're going to quit buying that nice couch that mama wanted, but they're going to keep eating. And in COVID, we learned how to eat well at home. So we're pretty confident that demand will hold in there on our meats.
And on another note as well, I wanted to throw this out to you. I saw this morning, the General Administration of Customs report about China, their beef and pork imports. Year to date, imports for beef up 1.7%, year over year for June up 42.7%. On the flip side, pork imports year over year 64.2% lower, and year to date down 65.1%. I think that shows with the Chinese that they're bringing in more beef, but not so much on the pork side, and that's to go with everything else that's going on in China right now with their financial markets, et cetera, Bill.
That does have a lot to do with it. Their GDP came out the other day, and it was very negative. 17% of their economy is shut down right now. Over 200 million people are at home. But one of the other factors that has happened there is that they've rebuilt their hog herd. And they're almost in an overproduction scenario right now. So they don't need to import a lot of our pork.
Well, good things to consider. Bill, before we run out of time, any final thoughts you have for us today?
Yeah, I think that this is going to be a time period. You talked about the guy that oversold. Well, there's more people who probably haven't sold enough. So I think what we do, we have to face reality that our risk period for selling for this crop production, and therefore the window for a big price rise, is right about ready to close. So be prepared. You be definitely prepared to sell if there's a rally. That's a no-brainer. But if we aren't getting that rally, be prepared to sell. $5.90 corn is still a pretty darn good price.
Definitely. Well, Bill, if producers need a little advice with their marketing decisions, I know you and the team there at agmarket.net have a lot of resources to help folks out, don't you?
Yeah, we do. We'd love to have you come on and take a look at our resources at agmarket.net. Just go to the Ag Market Intel page, and right there on the right-hand side, you can sign up and get a free trial. There's 23 reports. We'll help you reduce it down to what you really want to get. Most people don't want 23 reports, but most people are getting 3 to 5 and of what they want. So depends on your industry.
Well, a lot of great stuff. Again, you can find it all online at agmarket.net. You can find their phone number there as well if you'd like to give them a call. With that, Bill Biedermann of agmarket.net. I always appreciate the time, sir. Thank you for joining us, and we'll talk to you again real soon.
Thank you, Jesse.
And that's going to do it for Market Talk here today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.